Tolga Kumova. I am Executive Chairman of Aston Minerals, based on the ASX. The code is ASO. And my background, I was a founder of a company called Sierra Resources, and we developed the world's largest graphite mine in Mozambique. We raised $400 million to build that plant, which is now operational. Subsequently, I went and put together a couple of other companies, which have been quite successfully built. The Century Zinc Mine in far north Queensland, and we're moved on to Aston Minerals.
Tolga, good to meet you.
Not too much.
We've not spoken or met before, so I'm sort of intrigued. We love a nickel story. I think all our members know that. And I want to talk about what you guys have done. So you go into a little bit of background there. So you're a finance guy, technical guy?
I'm more of a finance guy, definitely. But over the years, I've become a technical guy as well, to a certain extent. But I'm definitely more markets focused. Okay,
cool. So let's talk about what you've got here. Okay, we're talking nickel sulphide. Can we just start with when did this project start off? Because if I'm looking at your early press releases, you were hunting gold.
Yeah. So the project evolved. The company evolved. It was actually a shell company that had some money in it. We were looking for assets, as most junior companies start. And we met a gentleman by the name of Dale Gin, who was working, I suspect, with Eric Sprott and those guys in the past. And he was started asking some questions about what opportunities are based in Canada, and we're looking for like large gold projects, with what we're interested in. Being successful with a little company called Bellevue Gold, which is in Australia, that's no longer a small company. And he approached us and said, look, I've got this project that I drilled in 2012. And he pointed out one of the intercepts, whereas I think it was like 5 meters at 85 grams from about 110, 120 meters. And the second he said that, I'm like, okay, this is interesting. There was a step back hole he showed me, which is 3 meters at 52 grams. So I was like, okay, there's obviously a large mineralizing deposit there. So we bought that asset, or bought these licenses in Ontario and Canada for about $3 million in shares and a couple $100,000 in cash, and went from there. So the story evolves. We're drilling for holes for gold, and we hit, I think it was a meter at 2 kilos from about 350 meters. So it was a pretty good gold hit. And as we're stepping along, we're hitting sulphides, and we're XRFing, and we're looking, it's coming up with nickel values. So we're like, okay, this is interesting. We need to look at the potential for nickel here. Went back through the archives in Ontario, the mines department. In the mines department, there was a report by a group called Aston Minerals. And they did a report on the potential for nickel sulphide deposit on our district. And down south, and I'll go into detail about the location a little bit later, but there was a couple of drill holes drilled in 1959, 1960. And those holes hit decent intersections. And we're one of the holes, the last 30 to 40 meters, the grades go from 0.28, 0.3, 0.32, then it's 0.36, then 0.42, 0.4, 0.45, 0.5, 0.58, 0.52, 0.42, 0.6, and just kept getting better at the last 30, 40 meters. And we're like, okay, something's interesting is happening here. And obviously those kind of intercepts in 1959, 1960 are clearly not as interesting. But in today's day and age, what BHP and all these large nickel intrusive ore bodies that they mine are all about 0.5 to 0.6 grade. So that clearly pricked our interest. We set off to put some permits in. We didn't know what we're going to hit there. We could put a couple of permits along the structure. The structure's got a little bit of cover. So there's between 10 and 30 meters cover there, which is glacial till. And the reason why this deposit is still here today, and why the guys back in the 1960s didn't really pursue it, is because that cover effectively masked the deposit. So unless you knew what was happening in the 60s, 1980, 20, in the 2000s, you're not going to see it. And that's the reason why it's still there today.
Okay, so before we get too deep into that, I would just want to get a sort of helicopter view of what it is that you guys are and what you're trying to do, because there's a press release to do when I talk about in terms of the grade that you're finding for the nickel, which is okay. So let's come back to the company. So you guys said, right, I've got a shell here. We're going to find an asset to roll into. You're after gold. Very quickly realize, the nickel's going to be slightly more interesting. So has the gold component gone away now? Have you just stopped chasing that?
No, it hasn't gone away.
Right.
No, there's approximately, I'd say, something north of 100 holes that's been drilled into this thing. And Dale Gin actually did this drilling. So we drilled a bunch of holes ourselves. And obviously with the gold assay labs in Canada, it's been horrendous trying to get results and actually understand what we're sitting on. But we're in a position almost, because all these historical holes, we need to go back and validate them, make sure they're right. So we've gone through that process. We've drilled our own holes to confirm what we've seen. And now we're almost in a position where we're going to talk about the gold results as well, which we haven't really focused on for the last 6 months, I'd say.
Right. But just on the drilling there, then you've got 100 historic holes. You've done, I don't know, what you know, like twinning or infill kind of?
Infill extensional. We've gone to the east. I think we've drilled about 60 holes into the gold. Okay,
fine. And is that an entirely different area from where you're finding the nickel?
Oh, this is a tough one. It's kind of intertwined. It's because the nickel is so extensive. It looks like the nickel has actually come through where the gold was and remobilized the gold. So there was this large gold system, but it looks like it's actually potentially separated and it flows through it. So where we're finding gold, there's potentially nickel as well.
But you're gonna have to make a choice here, aren't you? You're gonna have to, because you don't go hunting for gold the same way that you discover the nickel sulphide ore body, right?
Yeah, exactly. It's well, we found the gold only, and this is Dale's work back in 2012. Is the reason why I identified it? He was actually doing IP studies to identify the sulphides. So the IP studies were actually coming out with a very large response, where he was hitting very large and extensive gold system. So you'd see hits like 100 meters a gram across this structure. So it's not like it's this small, narrow vein type gold deposit. It's actually large, broad gold deposits. So it's interesting in that sense. And we're going through a process right now. And there's potential. I say potentially, it's, I'm not the resource geologist, but there's a potential for a decent sized gold deposit there. But there's a big difference, and we haven't really gone into the nickel, but there's a difference between finding, and to take this as a grain of salt, finding a few million ounces of gold and finding 300-400 million tons of potential nickel sulphides. And especially in today's climate, when electric vehicles and the demand for nickel is going through the actual roof. It's
right. So you're saying that you'll have to find a way to try and do both, or you're going to have to pick your commodity of choice, or you partner with someone, or you spin out. I mean, what are the conversations you're having at the moment?
Internally, it's kind of a tough one. We're putting all our resources towards the nickel. And again, we'll go into it later as to why. And
well, tell me now. I'm happy to have that discussion now, because I think it's intriguing, because you're at a decision-making point, because you got to work out the best use of money. A company of your size, you got to work the best, most efficient use of capital, and you've chosen nickel. So why?
Well, the main reason is the last hit, the most recent intersection that we released to the market was a 163 meters at 0.52 nickel with, I think it was like 0.016 cobalt, and the hole ends in mineralization. So, and the last 18 meters of that mineralization is 0.66 nickel plus 0.014 cobalt. Now, if you do a nickel equivalent, that's about 0.75 nickel over the last 18 meters, and it ends in it. I don't know if you've seen this, but when was the last time you saw 163 meters of 0.52 nickel hit anywhere in the world?
No, it was definitely intriguing, and I was sort of keen to understand, what you now do, having seen that, because it is very, very appealing. And also, just for the sort of uninitiated, because we've had a few questions sent in. It's like, and sorry to ask you to do this, but can you explain why you would bother reporting the cobalt number at 0.016?
Yeah, when you build a plant that's potentially, now this is talking forward, right? So we're speaking on the basis that potentially one day we get a resource and it's a scale that we're looking at. When you build a plant of a scale that you potentially can, where we with this deposit, if it stacks up to what it looks like it's going to be, then 0.014, 0.016 is incredibly relevant, especially considering the amount of cobalt demand and the price of cobalt, then where it looks like it's going, and especially diversifying from the places like DRC and the rest of it, and coming from Canada, obviously is going to be quite appealing for everybody.
Right, and so just push that a little bit further, right? But, I know this. We talk about it every week on our weekly battery show at cruxinvestor.com. But the cobalt, or the byproduct of cobalt, in terms of dollars to you, it's meaningful, and obviously in significant quantities as well. If you can build this resource out to a certain scale. But I think some people perhaps new to the space will be looking at, well, they can't be that significant. The numbers are minuscule. You should focus on the gold. So what do you say to that? Because you told me we picked nickel. We picked nickel.
Yeah, I'll put it in a bit of context. So if you have, we've drilled a 163 meter section there. And that was part of a 282 meter section at 0.43 nickel. So, and that's ending in mineralization. So we haven't been able to drill through this structure. So we then stepped out 150 meters to the southwest. We drilled another hole. So now we're testing strike extent here. And we drilled a 522 meter hole. From about 270 meters, we hit another 245 meter section of visible nickel sulphides. There's semi-massive, there's very coarse, there's disseminated, there's fine, it's extensive all the way through that section. So very quickly, we're going to put on tons here. So 150 meter step out, you're potentially already looking at, and I say potential, and you can do the back of the envelope numbers, that's 300 meters of strike. So you take a 50 meter or 100 meter side on each side of that. You'd add, we know we're at least 350 meters width, because we haven't even been able to get through the structure. So the mineralizing host structure, we haven't been able to drill to the other side just yet. It's looks like it could be 300 to 400 meters deep. So we're looking at a very large resource already. It's just a very early days for us. So that hole's hit, and that's into assays right now. We then, just purely because we're kind of trying to test the boundaries of this deposit, stepped out another 100 meters. So we're drilling that hole as we speak. And I mean, I can't report anything on that just yet. It's just early days. But yeah, the potential scale is in the many, many hundreds of millions of tons. And that would be incredibly relevant to any of the battery producers, any of the major mining companies. When you put into context, look at BHP. So most people know who BHP is. Nickel West is their nickel division. Their entire resource base is 1 billion tons at about 0.6 nickel. Their largest operation that's been going for 50 years right now is called Mount Keith. And Mount Keith is 230 million tons at 0.52 nickel. And they only get to liberate 50% of that. It's actually only 50% is in sulphides. With our deposit, so far from the intersections we've identified, it's we've got 93% of the actual nickel liberating into solution in the first partial digestion. So we're incredibly confident that the sulphide content versus the silicate content is beneficial. Okay,
so and we know a lot about it because we've interviewed a few companies, quite close to you, who we've learned a lot from. So, and I think the general cry is we need all the nickel we can get. So we're successful to everyone. So we're not picking sides here. But what they've been able to talk about and demonstrate is, one, a knowledge of the nickel market more broadly and how they insert themselves into that, and potentially how they get funding to for whether it be for, to build a plant and processing facilities, and perhaps potentially who would be stepping in and buying them, right? Because they're going to need big strategic partners, more importantly, big strategic balance sheets are capable of actually advancing these projects along, because they are vast. They're multi-decade type projects that you were talking about. You've got, similar sort of scenario here. So where are you in that mix? Like, so how much cash have you got today, and what do you do with that to advance this forward? Because it's early days still, right? So what do you think you're going to be able to do with the cash you've got available today?
Okay, so it is very early days, and we're a junior mining company. We're going to need money at some point. So that's just being brutally honest. Every junior mining company at some point needs to raise capital, because we want to progress what we're doing, right? And our strategy here to date is it's been incredibly, we've been incredibly lucky, let's be honest. I mean, to go and hit 163 meters in basically one of the first holes is very lucky, especially at that kind of grade. It's not like we could have drilled and hit 0.23 or 0.25 or 0.3. We didn't. We hit about 163 meters at 0.52 plus the cobalt, ending in mineralization. So I'm going to be perfectly open. That's lucky. What we've done is stepped out 150 meters and hit it again. So we're already on the path to expanding the size of this deposit. We're stepping out again. So another 100 meters to the south, we're already got the pads in place, and we've got a rig probably starting next week, 100 meters to the northeast. So if we put those 5 holes in, and once we finish those 5 holes, if they all come in, and I'm Mother Nature, geology, I'll qualify it and quantify it as much as you want, as you possibly can. I don't know what's going to happen. I don't know what happened, in terms of the grade, and basically that's where we're sort of focused. Is if the grade hangs together and we map out 1 kilometer of this, and it's 350 meters wide and say 400 meters deep, there's going to be a very large nickel deposit, which is relevant to Canada and North America, which is only 150 kilometers north of Sudbury. We've got multiple refineries there, with a battery market, that's in North America that demands this, kind of needs this to evolve. So, and the other benefiting factor in terms of where it is in the world, it's a little bit better than I'm comparing to Australia. In Australia, we're paying somewhere between 25 and 30 cents a kilowatt hour for electricity. In Ontario, Canada, Quebec, and that part of the world, it's in terms of the power produced, the hydro, it's all clean. It's nowhere near as expensive as what it is here. I'm talking about Australia. So the opportunity is incredible. And I'm not just talking about it for us. There are other nickel companies in our jurisdiction, our region. When you look at their grades, and the biggest cost of a mine is energy, the best place to find it is in Ontario, Canada. For sure.
But back to the question, though, in terms of money you've got available to you now, I get that juniors need to raise money, a lot, and that's fine. So how much have you got now? What are you going to do with that? What do you do next? I guess it's going to depend on what you find. But if you find more of the same, are you the guys to keep this going forward? Because after all, you did start off hunting for gold. So what's your intent? So start with the money bit first.
So we had about $3.6 million at the start of the quarter. We're going to need money, and I'll just be blatantly honest about it. Our current existing shareholders, of which the board and our close friends and confidants are large shareholders. So in terms of raising funds, they'll be there for us. And I personally will cut a large check to progress this, if we're successful. So the funding will probably come from our mates, and existing shareholders. If we're successful in the next 3 or 4 holes, every major is going to be going, okay, there's, I don't know how many hundreds of millions of tons potentially there. It's going to be relevant. Like if BHP's Mount Keith is 230 million tons at 0.52, then anything above that is going to be of interest to the majors. Do we want to build it? I'll be brutally honest, I've built mines before. So if I've done I talk about Sarah, which took 6 years of my life. I raised $400 million. It's a lot of work and it's very tiresome, but in the sense of being able to do it, projects like this, if this scale, if what we are doing is what it is, will attract the talent. And the one place in the world that you want to find this, a project like this, is 150 k's north of Sudbury, because the amount of skills, technical capability in that part of the world to run, operate, and build a mine of this scale it's probably the best place in the world to have discovered it. So whether it stays in this company and we progress it to the point where we need to raise a few $1 billion and then build a major mine. But I mean, again, if we find a deposit or at 0.5, 0.6, 0.4 around that region, and who knows, maybe better. I think it's Mother Nature. But if we find a deposit of that scale, then, and building a 20 million ton per annum plant, let's use a hypothetical, 20 million ton per annum plant processing 0.5 material, you're producing north of 50, somewhere between 50 and 100,000 tons of nickel metal. Plus the cobalt we're talking about. That's going to be relevant on a global scale.
It's definitely relevant, but it's a question of your intent and your ambition and what you're capable of doing. You're going to write a big check. Your mates are going to write a big check. Shareholders have done quite well over the last just over a year with the shares. But you've got some big decisions to make now, right? Which is you got to raise some capital to drill. I don't know how many meters you're going to go after, so I don't know how many dollars you're thinking about.
Yeah, no, we need to do about 20. If it all comes together like we're thinking, probably about 20,000 meters.
Okay.
It's not like the gold. This is not a narrow vein gold deposit. We're not doing 25 meter spacing or 50 meter spacing. We're doing 100 meter spacing. It's like a large magmatic nickel intrusive body. So we're doing large space drilling.
Yeah.
So it's more like to give people a good example, it's like finding a porphyry copper deposit. You kind of know what you're going through. It's going to be somewhat uniform.
Yes, it's fairly homogeneous. Okay, so 20,000 meters, that gives us a sense of, and it's all fairly shallow stuff as well. So that's quite a few holes you're talking about there. And we understand the cost of drilling in Timmins. So, okay, that's good news. So you're going to raise the money presumably at some point real soon, possibly this quarter. And the drill season, remind me, when's that all kind of kick off over there?
Yeah, well, we can drill all year round.
Okay.
One of the reasons why we're, if you look at these earlier announcements, we're drilling off one pad. That's all we permitted. But when this second hole or third hole, I think, what we put into this is hitting these blebs of pentlandite, you're like, okay, we need to figure out what else is going on here. So we went and permitted a whole bunch of holes to attack it from both angles. So it's, the deposits, just give it a context. This is defined by a large magnetic response. So wherever we drill this magnetic response, we're getting nickel sulphides. It's just when we found this particular zone, the blebs and the coarseness of the pentlandite just increased. So that's basically where why we're focusing on this particular part. We're not sure if this is the best part of our deposit.
Right. Well, no, at this early stage, why would you know that? And so you're going to clear about what you are comfortable doing. So you got to raise some money, do some drilling. That's kind of the easy bit, right? I say fairly homogenous. You've got a decent sized land package. But at some point you say, well, either we've got the skills or we can buy the skills and we're comfortable doing that. Or you say, we need a strategic partner in here. One, for their balance sheet. Two, probably possibly for the skill set, and maybe to satisfy some of your other ambitions of maybe growing this thing even further. Because are there a lot of properties up there available to you?
Let's think this through. So in terms of investors, and this is the reason why I'm here, is value creation, right? When you go and hit 163 meters and end in mineralization of 0.52 nickel, step out another 150 meters, hit it again, and then continue to do so, that's where the value is created, right? So we're discovering a large nickel system, nickel ore body. It's not It's not 0.2, it's not 0.3, talking about significantly higher grade. So you can look at those deposits and understand the difference in what we're doing. So if this does continue and it does have that scale, that's where a lot of the value is going to be created. Am I going to be here in 50 years still mining it? Don't think so. That's not my plan. I don't want shareholders to be waiting that long to actually to generate value. So what we can do at this point, and the team that we have in place at this point, is effectively drill out a proper resource. And that's what the ambition of the next funding exercise is. It's not, well, we'll do the metallurgy as well. So we're sending off samples to do all the metallurgical work to prove that it is what it is. And we can tell from the information that we've got so far that we're quite confident on that. But we'll do that part. But when it comes to actually designing and operating a plant, that's Vale, that's BHP, that's Anglo, it's Glencore, it's not us. Not at this point anyway. I mean, like I said, if we go and define 400 or 500 million tons, let's say do a hypothetical, 300 million tons at that kind of grade, our board will evolve, our management team will evolve, the skill sets of the company will evolve. And I mean, I've been through this before, and I've taken a project from the first drill hole to an operation, and it's the people that we started with and the team we started with weren't the same people where we ended with. So it's a matter of life cycle of a company, an exploration company, going from an explorer to a producer. But I can assure you this: most of the value was generated in discovering the deposit and just defining its the grade it is and the scale it is. That's basically the aim at this point, Matthew. Until we go and define exactly how large this is and what the system's doing. And to date, it's been incredibly homogeneous in terms of its scale. And if the next 2 drill holes do what we hope they do, then we're looking at one of those very large magmatic nickel sulfide intrusive bodies that's going to be of relevance to a lot of majors, especially at this grade. And especially the sulphide versus silicate content. And again, I'll say we're not in Tanzania or DRC. This is Ontario, Canada, where the power used to produce it is all hydro. The cost structure is very different, and there's so much technical expertise, not just for us to tap into, but also whoever eventually acquires this if we do what we say we're going to do, or we hope we're going to do.